Welcome to Matters Financial and Geopolitical from the Frontier. I hope the week's gone well. Keep whizzing around, and before we know it, we'll be at Christmas, I'm sure. Let me first thank Bob Collymore, Safaricom, UNICEF and various other folks for a really very engaging and thought-provoking conversation around children's rights and how to actualise those. And really it was very powerful. And there was a panel, Bob and a couple of kids, and I can't remember their names exactly, but they were very articulate and compelling, and thank you for that. We got mine to speak tomorrow with Pradeep Pranrana. Spoke to him yesterday, just got back from London, looking forward to hosting him. Of course, Arm cement, clinker companies started life in agricultural lime, gone back to fertiliser. So lots of interesting points, and Pradeep's also the chairman of CAM, Kenya Association of Manufacturers, so we'll have a good view on what's going on. Sankara Hotel, 9:30 a.m. If you're interested in some tea or coffee, and we start promptly at 10. Put up a photograph of Pradeep receiving us in Tanga when we went to pay a visit to his facility there. Macro thoughts, this caught my attention. The Credit Suisse CEO, of course I worked there many years ago for Credit Suisse First Boston, but anyway, he's saying African reliance on foreign debt is madness. Thiam says it is madness for African nations to rely on loans and foreign currencies to fund vital infrastructure, including roads, power and clean water. Lenders in African nations must instead find domestic savings to invest in local projects that the Ivory Coast-born banker. Thiam's warning comes after countries on the continent where he was born sold $11 billion of foreign currency bonds in 2013, a further $8 billion last year, raising concerns among some analysts that a new debt crisis may be developing. The IMF and the UK's Overseas Development Institute have written about the risks of African governments taking on too much debt. Borrowing costs could increase unexpectedly during periods of uncertainty, the IMF said earlier this year. In particular, sub-Saharan African borrowing costs are expected to increase as yields in US bond markets start to climb. Put up a photograph of him, and really interesting chap actually from what I can see, and kudos to Credit Suisse for appointing. Matt Miller, a 50-year chart of the 10-year yield at HSBC, says we're headed lower to 1.5%, to be exact, is where they're calling it. Home thoughts. I was sitting next to David Drinkard at the US Embassy this morning, and he asked me to have a look at this, Michelangelo's 16th century grocery list. And he illustrated the shopping list because the servant was illiterate. I then jumped from there to A.A.Milne, Winnie the Pooh. If you live to be 100, and I want to live to be 100 minus 1 day, so I never have to live without you. We'll be friends forever, won't we, Pooh? Asked Piglet. Even longer, Pooh answered. Isn't that lovely? Promise me you'll always remember you're braver than you believe, stronger than you seem, and smarter than you think. Political reflections, no more new cars or furniture, says King Salman, as oil slump forces cuts on Saudi Arabia. Saudi government has banned official purchases of cars and furniture and slashed travel budgets and infrastructure spending as it faces its gravest fiscal crisis for years because of low oil prices, according to leaked internal government documents. Secret Saudi policy memos issued by King Salman to the finance minister detail the new economic austerity measures to be implemented across all government ministries. Saudi public finances had been depleted this year by tumbling oil prices to such an extent that the kingdom is expected to run a deficit of at least 20% of GDP in 2050. They can afford it, but how long can they afford it for? And that takes me back to something I wrote on August 2015 when I said the end is nigh for crude oil and oil producers from Caracas, which is going to contract 10% this year, by the way, Luanda coming under significant pressure, unable to bring Europe onto the market. Riyadh to Abuja. Riyadh, of course, has very deep pockets, so they can ride this out. And in Abuja, it looks to me that he's going to make huge savings by draining the trough of corruption. And he might well make up the difference just by that. I go back to Kapuscinski and I quoted, my words were the meltdown is coming, but I now think the oil price actually pops back to 55.60 before we go down again. Richard Kapuscinski said, if the crowd disperses, goes home, does not reassemble, we say the revolution is over. And I was saying the revolution is only just beginning. Further conclusions, I think the kingdom has lost its way and is like Gulliver, becoming more and more ensnared in the Lilliputian's net. Put up a photograph of King Salman. Russia is, according to Al Jazeera, denying reports from unnamed US officials that 4 Syria-bound missiles fell in Iran. But the point about the Russian intervention was that it was pretty breathtaking, wasn't it? The speed signaled that they were not down and out, and they continue. And I think it was a very a strong geopolitical statement. Minutes show Fed leaders delayed rate hike over global risks. Policymakers agreed that developments over the intermeeting period had not materially altered the committee's economic outlook. The committee decided that it was prudent to wait for additional information, confirming that the economic outlook had not deteriorated. Concerns over China's potential spillover to other economies were likely to depress US net exports and cause further strengthening of the dollar. Stock market held gains, dollar fell as investors saw little reason in the minutes to expect a Fed rate hike soon. Central bankers held the federal funds target rate in a range of 0 to 0.25% since December 2008. Implicit acknowledgement that they would have raised rates if not for the uncertainty from overseas. Investors react to the September meeting by lowering the probability the Fed will hike before the end of the year to around 40%, from 64% the day before the September 17th decision. So dovish, as I said when I put that in my macro thoughts, and I said, it's time to buy. I thought risk assets can rally into year end, and I think that rally will continue. The euro is popping higher, 113.28, dollar index around the 95 level, dollar yen 120.50, Swissy 0.9641, the pound 153.64, the Aussie, and I'm bullish about the Aussie actually, 0.7284, India rupee 64.845, South Korean 111.4779, Rial well below 4 now at 378.36, Egyptian pound 782.97, and the rand 1330.98. Let me put up a 3-month chart of the dollar index. I think this pullback has still further to go. Euro dollar, I'll put up a 6-month chart. Next stop is 114.50. New Zealand currency, let me put up a chart, a 6-month chart. I think you buy this. Japan's fear index, Nikkei volatility, drops almost 5% to the low since August. That's in tandem with what we've seen in the markets, a strong equity market rally. Commodity markets, an index of diamond polished prices reached a 5-year low last month. Have a look at the chart, and then I couldn't resist this. The Steinmetz pink is the diamond weighing 59.6 carats. The color defined as fancy vivid. Gold, that's popped up to 1151. Now let me put up a 6-month chart, and 1155 key resistance. It's been rejected a few times though, but I suspect we're going to test that maybe as early as today, and I think we might sort of pop our way up to the 1200. Let me put up a NYMEX and Brent crude chart, and you can see quite a strong rebound came into play over the last few sessions. Crude oil last at $50.31. My target is 55 and even 62.50 before we come back down again. FAO, food prices lower for longer. And this is a bullish development, particularly for stability. The food revolution correlation is very high. The FAO food price index fell to a 6-year low in August, inched up the next month. The global food import bill is expected to fall in 2015, dropping to $1.09 trillion, a 5-year low, and down almost 20% from the record high of $1.35 trillion in 2014. Let's move on to Africa. Western countries lead foreign direct investment into Africa, accounted for more than half of all greenfield investment in 2014, estimated $47.6 billion invested. This is FDI intelligence. North America's second largest source region for investment into Africa at $13 billion. Looking by capital expenditure on greenfield projects, France was the biggest spender. Top FDI source country for investment into Africa in 2014 at $18.3 billion, followed by Greece, the US, China, and Belgium. Belgium saw the highest increase in capital investment into Africa in 2014 with its $5.2 billion, thanks to commercial real estate developer Pilos's plans to build more than a dozen shopping malls across Mozambique. Very interesting, isn't it? China accounted for 7% of greenfield investment into Africa last year. US companies also have been following. US was ranked the third ranked country for capital investment into Africa. Talking about IBM, Cummins, and a bunch of other companies. Times Live, very interesting article. Africa's old men's club out of touch with continent's suave and burgeoning youth. In 5 longest presidencies stretching between 29 and 36 years, adding to a cumulative 169 years, their longevity in office is matched by their old age, ranging from 71 to 92 years, and a combined 392 years. Gabon's Omar Bongo had been president for a whopping 41 years when he died in office at the age of 73. Hastings Banda was ousted from office in 1994. Zimbabwe's Mugabe is 91, making him the oldest leader in the world. He's followed closely by Tunisia's Essebsi, 91, Cameroon's Paul Biya, 82, Liberia's Ellen Johnson Sirleaf, 80, Algeria's Abdulaziz Bouteflika, 78, Guinea's Alpha Condé, 75, South Africa's Zuma, 74, Equatorial Guinea's Theodore Nguema, 73, Namibia's Hage Geingob, 73, Eduardo dos Santos, that's Angola, 72, Uganda's Museveni, 71. Average age is 78.1, compared to 52 for the world's 10 most developed countries. Africa has a very small proportion of younger leaders between 35 and 55. Paradoxically, it has the youngest population in the world. This writer, and I agree with them, leadership age gap disconnect between the leaders and the led. 85% of Angolans were not born when Dos Santos came into power in 79. 83% of Zimbabweans were born after Mugabe came to power. 79% of Ugandans were born after Museveni took power in 1986. On average, only between 15 to 21% of their citizens were alive when these presidents took the reins. Good grief. So with a burgeoning youthful demography at the bottom, the political top is disturbingly a greying lot. The issue here is the age at which African leaders continue to hold the fort and ultimately refuse to unclench their grip on power. If the average age of the continent is in the 20s, why is the average age of leadership 65? Part of the explanation across the board is their mastered use of brute force and violence to cow opponents. Also, the aging leader supporters argue that with age and longevity in office comes wisdom, foresight, and experience. But this is clearly contradicted by the abysmal performance of their economies and uncertain socio-political stability. Africa will for the foreseeable future stay caught in unpredictable generational crosswinds between her past and the future. Very powerful. I spoke about this when I wrote that piece last year, Ouagadougou's Signal to Sub-Saharan Africa, when I said what's clear is that a very young, very informed, very connected African youth demographic is set to alter the existing equilibrium between the rulers and the subjects, and a rebalancing has begun. May 2015, and I was talking about the street when I said, quoted Paul Virilio, the revolutionary contingent attains its ideal form not in the place of production, but on the street. And I was talking about how the country's youth flex their muscles in Ouagadougou. In Paul Virilio's book, which I was referring to, it's called Speed and Politics, he says the revolutionary contingent attains its ideal form not in the place of production, but in the street, where for a moment it stops being a cog in the technical machine, and itself becomes a motor, a machine of attack, in other words, a producer of speed. So as we look around the world today, we can see a battle for the street, from the streets of Bujumbura to the streets of Baltimore. And I said, what Ouagadougou showed me is that you can achieve escape velocity. I think we're going to see folks achieve escape velocity all over the continent, given some of these attempts to lengthen terms. South African all share is at an 11-week closing high. It's rallied 5.94% year to date. Dollar Rand, I think, is headed to 13 now. Egyptian EGX30 rallied 1.86% yesterday, narrowing its loss for the year to 16.07%. Nigerian all share down 13.08% year to date. Ghana Stock Exchange is down 11.75% year to date. Tom Bowker tweeted yesterday a bunch of regulated and unregulated prices rose this week in Mozambique, starting with bread. In the past, this has led to unrest in big cities. So let me put up a photograph of a statue of Samora Machel that sits in the Praça de la Independencia in Maputo. East Africans may have up to a quarter of Asian and European DNA, says a report. People in East Africa have far more Eurasian ancestry than previously thought, owing up to a quarter of their DNA to ancient Asians and Europeans who migrated into the region, according to a study that could reshape the way we interpret human history. The first ever DNA sequencing of the skull of an ancient African, the 4,500-year-old Moto man, discovered in an Ethiopian cave, has revealed that a huge migration from Western Eurasia into the Horn of Africa 3,000 years ago was twice as significant in terms of numbers and genetic influence as had been thought. Indeed, it was so large it could have increased the population of the Horn of Africa by close to a third, which in turn led to a bigger genetic impact than expected, the report found. Very interesting. Let me put up another photograph I found in a museum in Maputo, and it was called Ethnographia, Mozambique. Treasury struggles to meet loan obligations. These stories are becoming quite alarming. The government defaulted on 2 loan payments amounting to 1.1 billion shillings in the last financial year, the central bank has revealed. The default was, however, settled in the financial year ending June 2015, underlining the cash crunch that preceded the issue of the sovereign bond last year. And basically, it's also implying that most of the Eurobond money, so 200 billion shillings that came in off Eurobond in June last year, there's only 25 billion shillings left now. The movement in the year in the special account is mainly attributable to the drawdown of the proceeds of the $2 billion Eurobond by the government of Kenya. Concerns are ratcheting higher about this. They really are, because a lot of salaries haven't been paid, power got cut off. Let me put up a photograph of the Central Bank of Kenya Governor Patrick Njoroge. I think he's doing a marvellous job, actually. And with the Treasury Secretary Henry Rotich, Kenya shilling around the 103 level. Everyone got quite excited yesterday when I called it and said, I expect the shilling now to head towards 100. Nairobi all share down 12.58% year to date. NSE 20 fell 0.74% to a fresh 2015 closing low. It's now down 20.95% year to date. At the bottom of Rich Wrap-Ups there's a link so that if you wanted to inquire into any share listed at the stock market, you can. I hope to see you tomorrow at Mindspeak. It's a free to attend forum, but kindly register on rich.co.ke and we can in future send you out email invites. Thank you so much.